Well, hello, Facebook, and those of you that are catching this later on YouTube. I'm Brantley Whitley, the other guy you see on the screen, who I'm not going to point at, as Brandon Roberts, and we are from the
Who's
Insurance
really busy
Pro Blog.
playing with his phone and stuff.
Yeah, that guy playing with his phone. We're from the insuranceproblog.com. If you've never checked us out, you should definitely head over there and do that. Today, we're going to talk about some life insurance-y stuff again. We're going to talk about replacements, but we're going to talk about it in the context of a special little section of replacements that applies to only people who have policies in the state of New York. It is called New York Reg 60, and it sounds ominous. It's not that complicated, but there are some specific procedures that have to be followed that make it a little bit different than replacing a policy in any other state that Brandon and I have ever run across anyway. So Brandon, what you've got 4 particular steps, I believe, that you've outlined here for New York Reg 60 that you're going to talk about.
We do? I didn't count them. I just know that there are specific steps.
Well, I was going by 1, 2, 3, 4. So
okay,
there you go.
That's good. That's good. Well, I started in New York, so I got to do Reg 60 right out of the gate. I don't know.
It came later to me, and I was like, "What is this special?"
I know that you have handled one Reg 60 situation since we've been working together, and it may have been the first one. I don't know. But
I've done a couple.
I know that it was something that I heard you complain about a lot during the process. So
it takes something that's normally just a few pieces of paper and turns it into a mountain of paper and sort of back and forth that has to take place.
Right. So we're doing this. I suspect that anybody who's watching us from New York, they kind of already know this process. You have to if you're an agent in New York. But for those of you who are outside of New York, who might have a prospect or client who is in the state of New York, this is an important thing because it's not something that you run into every day. Right. Most everybody else outside of New York understands replacements through a process that's pretty much unified or systematized by the NAIC. If you are working on a case that is a replacement, we should probably define that right now. Anytime that you are telling someone that they should take the coverage they have now and stop it and buy something new, that is what insurance calls a replacement. Right. Now that is the most straightforward definition of replacement, but as we'll discuss today, there's actually a couple of other things that might happen that would fit the definition of replacement in New York and elsewhere in many cases. So a replacement outside of New York's pretty simple. There's actually it's 2 pages, I think, is the NAIC form that most life insurers use. It basically alerts the policy holder or prospective purchaser that they are effecting a replacement, which means they're getting rid of a current policy and buying a new one. And there are certain consequences of that. And we want you to understand those consequences. So here's a list of things
in minute detail.
Here's a list of things you should know. And here are the claimed statements from the agent that tell us why this replacement makes sense. And here's a note on anything that might make this not so great for you. And we move forward. Right. New York's a different land all in of itself. So in New York, if you discover that you are going to be replacing a life insurance policy with a new life insurance policy, or you're going to be transacting this purchase in a way that fits the definition of replacement, which involves things like not only the canceling of one policy to purchase a new one, but also the triggering of a non-forfeiture benefit to perhaps free up premium to pay a new policy's premium. Non-forfeiture benefits being things like surrendering the policy for cash, extending the current death benefit out as term insurance, or the reduced paid up option on whole life insurance, or taking a policy loan from a life insurance policy to pay the premiums on a new policy, and possibly even using the dividends of a whole life insurance policy to pay the premiums of a new insurance policy. Those would all fit the definition of replacement, at least in the state of New York and usually in other states. And if that's happening, you now have to follow the New York State Regulation 60 protocol for making sure you're doing this replacement in a way that New York deems satisfactory to full disclosure on the behalf of the client. So here's how the process begins. you discover that you are going to be doing a replacement here. You have to have the prospective buyer sign what we typically refer to as a Reg 60 request form. It's a one-page form that specifies the insured, some specific information about them and their policy number. And you then take that form signed by the prospective buyer and you send it to the insurance company that holds the policy that they currently own a policy with. Right. That company then has a timeline to return information specific to you that you need to fill out the rest of the Reg 60 disclosure paperwork. And the Reg 60 disclosure paperwork is fairly lengthy, and it includes a side-by-side comparison of the policy that you are proposing the person purchase and their current coverage. It includes things like their current death benefit, both assumed and guaranteed, their current cash values, both assumed and guaranteed, their future premiums that will be due, both assumed and guaranteed. And your job is to take the information supplied by the insurance company and then take the information supplied to you by the insurance company that you plan on selling a policy with.
The illustration.
Information. Right. And filling out this side-by-side comparison. As
and it's
well
standardized. We should say it's totally standardized. So,
as well as filling out some information about why this replacement makes sense and noting any of the possible things that would be drawbacks, such as you're going to renew the contestability period with this new policy. You're going to renew the suicide exclusion period with this new policy. So those are negatives that the policyholder will face by virtue of making this new purchase. You then bring that paperwork to the prospective buyer, and they have to look at it and sign it. And then you can move forward with the application process. Here's the important thing about Reg 60. The timeline matters. So you cannot fill out an application with your new prospective buyer and do the Reg 60 paperwork and submit the application and wait for the Reg 60 paperwork to come back. You can't do that. Everything has to happen in order, and the Reg 60 paperwork has to come first. If you submit an application in the state of New York that is involving a replacement, and you do not have the Reg 60 paperwork, or you submit Reg 60 paperwork that's dated after the date on the application, the insurance company will reject it. So you kind of froze
am I frozen again?
You froze a little bit on me, and you froze with an expression on your face that
I said the insurance company has to reject it at that point. Yes. They don't have a choice. Yeah. And I will add, I don't know exactly where you're headed with this, but you can also add there could be an added degree of difficulty or procedural precision that has to take place if there's a 1035 exchange that comes along with the replacement as well.
That adds a whole new level of complexity, correct?
It has to happen A, B, C, D. Yeah.
Now, the other thing, a couple of things to note about this and why this is important to understand and why it's important to bring up in this context, especially for agents who do not do primary business inside the state of New York.
Right.
If you are, for example, meeting with a client in New York and filling out paperwork, if a replacement is taking place, you can't take the application technically. You have to perform the Reg 60 paperwork process first. Correct. So this could require a bunch of back and forth meetings with the client. Now, technology insurance has caught up with technology in many respects. The possibility to mail, fax, or email this stuff totally streamlines this process. But there was a time when New York didn't allow you to accept an application that didn't have what they called a wet signature on it. And so this added a certain degree of frustration with the process. But what you should know is if your plan is to visit New York and sit with your client and take this application, and you have any suspicion that this is going to happen, a replacement, you would be very well advised to get the Reg 60 request form signed and faxed off to the insurance company. I did say faxed because that's the way most of them want it. And
signed in crayon, preferably.
Yeah. And then schedule your meeting to actually take the application, because if you don't do it in that way, it becomes very complicated and very frustrating. The other layer of complexity with Reg 60 is a number of insurance companies will interpret their protocol for the process differently.
Oh, yeah.
And so you might discover that what worked very well with one company doesn't pass muster with another. The good news is a number of life insurance companies are willing to fill out the Reg 60 paperwork themselves.
Right.
So if they offer that to you, probably best to take them up on it, no matter how well you understand the Reg 60 process. Because if they do it, they will do it the way that they deem right, which may not be the way that you do it.
Right. Don't try to be a hero in this situation. And we have instances, I mean, don't be surprised when little hiccups happen along the way, like sort of expect them, anticipate that they will happen, because there are other times where even the insurance companies will disagree internally about how things are supposed to flow, should we say.
Also understand that the Reg 60 process creates a much longer timeline between we're going to do this to we're final. And that buys time for the current insurance company and the agent who sold that original policy to intervene with some preservation tactics.
Conservation.
Yes, conservation. Sorry.
No. It's the same thing, but yes.
So now you understand, those of you who do not do business in New York regularly, why so many New York agents always say, I don't talk to anybody about replacements. It's a convoluted process that is much more involved than it is everywhere else. And you should be ready to handle it if you are going to do business in New York and that business is going to involve a replacement.
Right. And don't be afraid to ask. I mean, because there are situations, I was thinking of one in particular where we had someone that was going from one type of policy to another type of policy. And then it becomes very, when you're doing the comparison forms, well, it's not apples to apples, right? Because let's just say you have someone going from a universal life contract to a whole life insurance contract. Well, just ask the questions and make sure that you get someone at the company to tell you exactly what they expect, so that someone else is responsible for giving you those answers.
The other thing is, we mentioned earlier, don't try to be a hero on filling out the paperwork. I would strongly suggest don't try to be a hero on interpreting life insurance policies. If you receive a Reg 60 disclosure from an insurance company and you look at the values that are there and you think to yourself, that seems wrong. There should be a higher level of some sort of benefit here.
Right.
You would be well served to just take what the insurance company gives you and copy that to the paperwork if you're the one taking care of it. Whatever they give you is whatever they give you. Trust me, every insurance company who works inside the state of New York has a Reg 60 unit that is there specifically to deal with this regulation. And what they tell you is the deal is what they tell you is the deal.
Well, because they don't just tell you, it's on paper. So
Yep.
So you have to, everything has to line up with the insurance company that you're trying to replace their company with, I suppose. They're going to demand, the company that you're working with as an agent is going to demand that everything lines up. So
Okay. All right. That's it for Reg 60, I believe.
Is that it?
Yep.
We've beaten that one sufficiently?
We have.
Okay. Well, I'll just assume that I'm delayed or frozen once again. And we'll wrap it up. I think we'll be back tomorrow probably. Looks like Brandon's anticipating saying something. So.
No, I'm not.
Okay. Or maybe the screen's just frozen. All right. Thanks for joining us again. The Insurance Pro Blog, Brantley Whitley, Brandon Roberts. And if you have a moment and you feel so inclined to do, you can go to ipblive.com and read more about our book and bonuses that we give with our book, Predictable Profits. Thanks again, and we'll see you tomorrow.